Welcome, my name is Gene Guarino. I'm here for Cool Trade University. We're going to be going through some very important information called Stock Market 101. During this presentation, you're going to learn a lot of terms from the stock market, things that you've heard before, maybe you didn't quite know what they meant. So we're going to go through this information. Don't try to feel like you have to get every piece of it. I just want to give you an overview so that when you hear these terms in the future, you have a good idea of where they come from and what they mean. So get ready. If you have a pad and a pen, this is a good time to pull it out. We're going to go right into this. So the first thing that I really want to discuss is, what is a stock? We say the stock market all the time, but when we say what is a stock is a ownership in the company. You own a small piece of the company. If you own a share of McDonald's, you can't go in and tell them what to do, but you own a small piece, which also means if the company makes a profit, they may pay you a dividend. A dividend is some of the profit that's given back to the owners. So a stock is a ownership in the company. A dividend is some of the profits distributed to the owners of the company. So if you own stock, you're an owner. Now, a bond is kind of the flip side. That's debt. When a company borrows money, it's called a bond. They loan the money out, they pay an interest rate, it is secured with the bond, so that's debt that the company itself owes. So you can also own bonds. They tend to be more secure with a lower rate of return, but a bond is another type of an investment. There's a very specific yield, it's got high security, typically because again it is secured by the company, it's a debt. So we have stocks, we have bonds. In addition to that, the stock market. We use that term all the time, the stock market. So what is that? Well, very simply, the stock market is where stocks are traded. When stocks are traded, they have to be done in a very specific way. There's large markets that we've heard of before, like the New York Stock Exchange, the NASDAQ, the Amex. We'll get into a little bit more detail of those, but the stock market is where the stocks themselves are traded. And in the stock market, there's different indices, and we'll talk about those. Things like the Dow and the NASDAQ 100. These are very specific tracking mechanisms. Parts of the stock market are traded within that. So we're going to go into some detail on that. And one of the broadest markets is the S&P 500. The Dow is really only covering 30 stocks. The NASDAQ's covering 100 stocks. The S&P 500 is covering 500 stocks. So each one is a little bit more broad. Yet I want you to get a feel for where these came from. And when we talk about the Dow Jones Industrial Average, the really interesting part of that is that it was created way back when. A gentleman named Dow and a gentleman named Jones came together, and as a marketing tool, they said, you know what, why don't we help people buy stocks by educating them a little bit? We're going to put together a kind of the top 10 list of stocks, and that's what they started with. Here's some stocks that we think that you might want to own, so it was a marketing tool. And they called it the Dow Jones Industrial Average. Now, it actually started way back in 1896. But what we see today when we talk about the Dow 30, that didn't come along till many years later. Back in, and you can see on the screen there, in 1896, the companies that were in the Dow Jones Index were companies we don't even see today. American Cotton, American Sugar, American Tobacco, Chicago Gas, Distilling and Cattle Feed. The only company you see there that you'll see today is the General Electric Company. It's actually the only company that has survived all of these years. They change these companies out. Every year there's a little adjustment. Some years a lot of adjustments, some none. But GE is the only one that is maintained through all of this time. The Dow 30, as we call it, really didn't come into existence until 1928. That's a pretty interesting year because the very next year was the stock market crash as we all know it. But in 1928 was the first time where it was 30 stocks that were being tracked. Up till then it was 10 and 12 and 28, and now it was 30, and this is the first time. So again, as you look at that list on the screen, you'll notice there's only one company there that still exists today that's on the Dow. We have the General Electric. Now Chrysler's there and General Motors is there, but in addition, the Sears and so on, but we see some other names, but the Dow is the only one where GE was there from the very beginning all the way through to today. So very interesting. So where are we at today? Well, we're at 2013 now, so the adjustments haven't been made, but as of September of last year, those are the companies you see: 3M, Alcoa, American Express, AT&T, Bank of America, Boeing, Caterpillar, obviously large companies. Now, a lot of people like to trade the Dow because these are large companies that everybody knows there's some stability and some quote-unquote safety, and safety and risk is something we will talk about in the stock market. But these companies are ones you've heard of before, and it really covers a wide range. We've got Merck and Microsoft, so everything from healthcare to technology to components, everything is there, but it's a representation. It's not every stock, it's not hundreds or thousands of stocks, it's just 30. So when you're watching the stock market, just don't get caught up in watching just the indice. The question is, what are you trading? What's the stock that you're looking at, and how is it doing? And we say, how is it doing? Going up, going down, we can make money either way, and we'll talk about that. So now let's talk about this term, listed stocks. When we talk about a stock that is listed, that means it's on one of the stock exchanges. Now, the big stock exchanges, the New York Stock Exchange, the NASDAQ, the Amex, but there's other stocks that are not listed, and these companies are what we call bulletin board stocks or over-the-counter stocks. And over-the-counter stock simply means that one broker talks to another broker over the counter, and that's where it's transacted. It's not on a board or a stock exchange like the NASDAQ or the New York Stock Exchange. It's broker to broker. Now, those are a lot less liquid. Maybe we can't find a buyer or a seller. Maybe we can't determine the price, meaning I'm willing to buy it or sell it at this price. We have to only do market orders. You'll notice I'm starting to put some other terms in here, and we're going to talk more about that as we go through. But then there's another term, maybe you've heard, it's called penny stocks. Now, the real definition of a penny stock is any stock that trades under $5 a share. Under $5 a share. Now, it's now come to be known as under $1 a share. So that's what people really consider to be penny stocks, is under $1 a share. Typically under $1 a share, they're not allowed to be traded on the NASDAQ because they've fallen underneath a certain level. Under $5, mutual funds won't typically touch them at all. So under $1 is what we now consider to be penny stocks, but the reality is there's now stocks that trade at a fraction of a penny. A fraction of a penny. Now, if you're going to trade those, yeah, I'll just tell you right off the bat, Cool Trade does not work with penny stocks, meaning under a penny, fraction of a penny. Those are not tracked that way. As a matter of fact, even penny stocks that are not listed, it's not going to work with those either. Cool Trade is designed to work with the major stock market indices, such as the New York Stock Exchange, the NASDAQ, the Amex, and so on.